Hello, everyone, and welcome to our final video in our finance workshop series. We're really excited to speak with you today about some last little financial forms that you might want to be familiar with, just so you can really be successful with your business. In our previous videos, we've talked through our cash flow projections, right, which is going to tell you kind of what you could be making with your business. And then we also talked about our break-even analysis video, which is telling you what you should be making, right, what you should be charging for your business. Today, we're going to talk about some forms that show you what you actually are making. And this is really going to be a way that once your business is open and you're up and running, you can really make sure that all of your money is where you expect it to be. And if you're noticing some trends, it'll show you maybe where some money is hiding. Okay, so the two forms that we're going to look up today are a profit and loss statement, which is also sometimes called an income statement. They're interchangeable. And then lastly, a balance sheet, all right? The key difference between both of these forms and the ones we've talked about previously is previously those forms were tracking projected earnings, right? Our cash flow projection was kind of hypothetical, right? It's what we imagine could happen if sales go the way we're anticipating or, under a certain model. With both of these forms, these will actually be reporting real numbers, right? So you can't do a P&L projection or a balance sheet projection because these templates and these forms and these ways of looking at our finances are ways of actually looking at real numbers in real time. Okay. So kind of in simplest terms, a profit and loss statement, as I said, sometimes called an income statement, it's the same thing, tracks real numbers coming in and going out of your businesses, right? So what we'll see is that there are expenses and there's income. And then at the end of our P&L statement, it will show us what our revenue is, all right? And that's real numbers. And then our balance sheet really gives us an overarching picture of our business. And this is where you would find things included on your cash flow projections or on your P&L, okay? Things like debt and equity that you might hold, okay? So we're gonna start with our profit and loss statement. All right, now what you're gonna find with a lot of these forms that we've been talking about is there's a lot of overlap with the numbers, and that's okay. Our profit and loss template is basically the same thing as our cash flow projection template, but with real numbers, right? And so when you look at these things, when you look at like your break-even analysis, you're going to see a lot of those same fixed costs and variable costs that not only do you see those on your cash flow projections and your startup costs, but you also see them here on your P&L. Okay, so remember, cash flows are an estimate. They're a hypothetical look at what you could earn over the course of a month or a year. P&Ls are a place to track actual transactions. Okay, so that's the biggest thing to remember. Okay, so let's look at our template here and we pull it up. And we're going to look through some of the things on this form that we maybe haven't seen yet. Okay, this is one of our examples. If you look, it's not as quite an in-depth template as like our cash flow projections where we had month after month after month, because really you're going to want to create a P&L for each individual month. You can certainly track this like you would in the P&L template or in our cash flow template. Right, where you kind of go month by month by month. But really, like a P&L is often written out just like this because it gives you a snapshot, right? Again, a cash flow projection is going to be a trajectory. It's going to be an arc of earnings over time. Whereas a P&L statement says, this was what happened in February, right? Or this is what happened. This is what's happened year to date, right? It gives you kind of a snapshot of where your money is right now, okay? So again, we see kind of a lot of similar things that we've seen in our other financial documents, right? So, for example, our gross sales, that comes directly from, what you earn, right? What do you make? What are your receipts that you've earned over the course of a time period? Okay. You always want to subtract returns, right? So for example, if you sell t-shirts and you sell, 5 to one customer and they return 2, that's where you'd put the returns, right? The money that you've kind of paid back to your customers. All right. Now, obviously, this number is going to total out right here, and that's our net sales. Okay. Now, remember, all of the things that we sell have that expense, right? The things that we sell cost money to make, okay? So that's where we have this expenses up here, which is our cost of goods sold, okay? Now, the reason we put our cost of goods sold up here at the top part of our P&L is because they are directly related to selling our product, right? Some of the other expenses that we're going to track below, those are related to being open, right? Things like our legal fees and our rent and things like that. But our cost of goods sold are directly related to our revenue and our income. So that's why we have it up here on our P&L, okay? So again, what we think about is, what did you spend to be able to sell $11,450 worth of your product, right? So where's your cost of goods sold? Now, as you'll see, this number and this number come together to create this number. This is your gross profit, okay? Now it's gross because it's still not the complete picture, okay? This is not what you actually earned. This is not what you actually made, okay? Because we haven't taken into consideration all of your expenses yet, right? Those fixed costs that we've talked about before when we did our break-even analysis. And that's where we have it here. So if you've done a really thorough break-even analysis, you already have all these numbers calculated out, right? And so it's just a matter of cutting and pasting and putting them here, okay? Now, there are a few other things to notice on our P&L that are slightly different than in our cash flow projections or our break-even analysis, right? First one is this one right here, our debt repayment. Okay, this would be, for example, if you took out a loan to open your business. What is your loan payment every month, right? That's what that is. If you have a credit card, right? What do you have to pay to your credit card every month for your business? Those are two examples of debt, right? Credit and loans. Now, you also have your owner's withdrawal, right? So this is, what are you paying yourself every month, right? What are you taking out to support the work that you're doing for your business, right? And then we have this miscellaneous line because, stuff's always going to come up with our business, right? Things that you don't anticipate, things that aren't monthly, but maybe come up, right? Maybe you offered to participate in a community event and so gave a donation of $65 or, a sponsorship, right? Or maybe something happened where, your hot water heater needed a new part, right? That would kind of fall under that miscellaneous thing. It's not an expense that you're going to anticipate every month, but it did happen that month, okay? So again, you add up all your expenses, right? All of them, every single thing that you paid over the course of a month, and then you take that gross profit and you subtract it from your expenses, and that's what you get your net income, right? That number is your actual revenue. That's what you actually made. So why this form is so important is you might be thinking, man, I sold $11,000 worth of my stuff this month. I'm going to have so much cash. I'm going to have so much money. But hold on. If you don't consider your expenses, you really didn't make $11,000, right? Really, you made just over $2,000 when you consider all of your expenses, okay? So that's why a P&L statement is so critically important to be keeping track of, because it's really going to give you a better sense of what you actually have as far as cash, right? What your actual revenue, what your actual income was for a month, okay? Now, there's this other income kind of right at the very bottom. These are less common when you have a kind of a new business, right? So this can be gain, a loss, or of sale of assets. So for example, if you have, you're a product manufacturer and you have some sort of machinery that you purchased to open your business, but then realize you have a new one that you want to update your machine with, and so you sell that old machine to somebody else who's just starting out. That would be listed as other sale of assets, right? It's kind of profit from that. And then maybe you own stocks or bonds or other contracts that kind of give you passive income. That's where that would fall, right? Your interest on your stocks and your bonds. That might come in on a monthly basis. Again, those are less common, but just make sure that you are tracking all of that income, because as you can see here, right, maybe you sold that piece of machinery, but it was actually at a loss, right? You had to sell it for less than you paid for it, right? So just keep those things there. But finally, once you add your operating income with any more additional, other income that you might have coming in, that is where you finally get your net income for the month, okay? So that's our profit and loss, or again, also sometimes called an income statement. Sometimes you see this just listed on like a Word document. It doesn't look like a spreadsheet necessarily, but it's just these numbers kind of all tallied up. And that's also a great way to keep track of these numbers. while we're talking about keeping track of our numbers, something to consider is using some sort of software, right? So something like QuickBooks. There's some free apps out there that are really fantastic resources to use. And I think that's especially important as we come over to our balance sheet, right? Our balance sheet is a much more in-depth look of where all of our money is, okay? Because again, we might have sold $11,000 worth of our goods over a month. And we knew we had like just about $8,000 worth of expenses. But you might be looking at your bank account and saying, where's all my money? I have no money in my bank account. That money is probably hiding somewhere in your balance sheet. Okay. So let's talk a little bit about our balance sheet. Now, obviously, it's a balance sheet, which means we want both sides to be balanced. Okay. So if we have money on one side, it should be offset on the other side, okay? This is where the beauty of something like QuickBooks will come in, because QuickBooks will automatically generate a balance sheet for you, okay? And if there's something with your balance sheet, if the two sides do not balance themselves out, this is when you want to bring in a bookkeeper or a CPA or someone who can really come and look at your numbers and say, aha, this is what we're missing. Okay. So again, just kind of looking through this, just so you understand what a balance sheet shows us. First of all, we have our cash, right? That's what's going to be in your bank. Okay. And again, maybe you made $2,000 last month, but you're like, I don't have $2,000 in the bank. Where it's hiding is probably in this accounts receivable line. Okay. Accounts receivable means invoices that you have sent out to a client that have not yet been paid. Okay. You might be someone who does a lot of service work, right? And so you have people file contracts, and those contracts are, say they're for $2,000, but it's for work that's going to happen 6 months from now, and they actually don't have to pay their invoice until the time of service, right? So you track that as income in your month, right? In January, you sign a contract, you say, okay, you're going to do this thing for $2,000. Great. You put that in your line of earned of income, right? That goes on your P&L right here on that top line, right, of your sales. But the thing is, that money is going to be living in accounts receivable for a while, because you don't actually get all that money until time of service, right? So sometimes if we're looking and our cash isn't there, right, probably means because that money is hiding in our accounts receivable. Okay. So that's just something to really consider, that if you're looking at your monthly financials and you're like, oh man, why do I not have any money in the bank? It's probably there, right? It's probably hiding in places where people owe you some money. Okay. So this is, again, just a thing that really gives you an overarching view of your money. Similar to a P&L, a balance sheet is going to give you a glimpse of your financials at a specific time, right? This doesn't show you, your trajectory over the course of a year. You could literally pull up a balance sheet for your business today, right? And that's what your balance sheet would be showing you. Another thing that I do want to share that comes up in our balance sheet that doesn't come up anywhere else is this thing, equity, right? So equity is a liability, right? It's something that you owe, right? Equity will translate into an asset of cash, okay? So if you've said, hey, partner, investor, you're going to get a certain amount of my business, and for that, it'll go over and be in the cash line, right? So you'll get money from that equity, but technically the equity is a liability. It's something that you've given away, right? So all of this to say that these forms, these last kind of these last forms that we've looked at, financial forms, are just a really great way of showing you other places that you want to make sure you're tracking your money, other ways of looking at your money, looking at it from a specific time point as opposed to over a long course of time. And just really giving you a sense of where things might be if they're not where you expect them to be, as far as, cash and revenue and all of that kind of stuff. So there we have it. Those are our last financial documents that we're going to take a look at here with this financial workshop series. Be sure to develop that good relationship with a bookkeeper, with someone who can really go in and delve into what QuickBooks can do for you, help you get set up so that it's really easy for you to just go in and track invoices and all of that stuff. There's lots, as I said, lots of free apps out there, web-based apps, and also apps for your phone that can help you keep track of your finances. And I think that's one of the things that we see most with businesses, right? Is one of the things that will have a business fail is actually business success, right? So make sure that you're keeping good track of your money. Use all these different templates, right? Our cash flow projections, our balance sheet, profit and loss statement. We'll use all of them together so that you really make sure that you have a clear view of how healthy your business is with your money, because that's what we want at the end of the day. We want you guys to all be growing, thriving businesses, so you can pay yourself and have it be, exactly what you want it to be. So if you have further questions, feel free to reach out to me. We're happy to make you some referrals if you need help finding a bookkeeper or someone who can really help you with all of that, a financial advisor. We're happy to do that. So reach out to me, Katie, at SCCF. Otherwise, thanks so much for watching, and I hope this video was helpful. The templates for all these forms will be in the description below. And we really appreciate you being here, and have a great day.